family office Archegos Capital.
Archegos Capital.
The Archegos Capital.
The Archegos margin call at the
March 26, 2021. In less than 48 hours, $20 billion vanished from the global financial system. Banks that had stood for over a century were brought to their knees. And at the center of it all was one man. A man so secretive that most of Wall Street had never heard of his name. A man who controlled a $36 billion empire from his Manhattan apartment. This is the story of Sung Cook Bill Hwang, the immigrant who conquered Wall Street, lost everything, and then built the most dangerous financial weapon the world had ever seen. 1982. 18-year-old Sung Cook Hwang steps off a plane at JFK Airport with nothing but a suitcase and a dream. Like millions before him, he came to America believing that with enough hard work, anything was possible. He had no idea that within 4 decades, he would become one of the most powerful and dangerous men on Wall Street. By the early 1990s, Bill Hwang had found his calling. As a stock salesman at Hyundai Securities, he discovered something that would define the rest of his life. He was exceptional at reading the market. While other salesmen pushed whatever stocks their firm wanted to move, Hwang had almost supernatural ability to pick winners. But selling stocks for other people wasn't enough. Bill Hwang wanted more. And in 1996, he would meet the man who would change everything. Julian Robertson was a legend. His hedge fund, Tiger Management, had turned a $10 million investment into over $20 billion. And Robertson didn't just make money, he created disciples. The best and brightest analysts who worked under him became known as the Tiger Cubs.
Anyone who sort of worked with Julian Robertson had great success under him and then was able to spin out and start their own hedge fund or their own investing firm came to be known as the Tiger Cub.
And in 1996, Bill Hwang joined this elite brotherhood. For 5 years, Hwang absorbed everything Robertson could teach him. How to analyze companies with surgical precision. How to spot trends before anyone else saw them coming. And most importantly, how to bet big when you knew you were right. But by 2001, Robertson was ready to retire, and Bill Hwang was ready to prove he could build his own empire. With seed money from his mentor, Hwang launched Tiger Asia Management. His focus was simple: Asian markets that Wall Street didn't understand. While American investors were obsessed with tech stocks, Hwang saw opportunity in Chinese banks, in Korean conglomerates, in companies that were growing faster than anything in the Western world. And for over a decade, he was right. Tiger Asia grew from Robertson's initial investment to over $3 billion. Bill Hwang had achieved the American dream. He was wealthy beyond imagination and respected by his peers, and completely convinced of his own genius. But success can be the most dangerous drug of all, and Bill Hwang was about to learn that the higher you climb, the further you can fall. 2012. After 11 years of unprecedented success, Bill Hwang's world came crashing down. Regulators in Hong Kong and the United States had been watching. They discovered that Hwang had been using confidential information from private placement offerings. Information that gave him an unfair advantage when short-selling Chinese bank stocks. The man who had built his reputation on brilliant analysis had been cheating. Hwang pleaded guilty to wire fraud. He paid $40 million in fines, and he was forced to shut down Tiger Asia Management. For most people, this would have been the end of the story, a cautionary tale about greed and hubris. But Bill Hwang wasn't most people. In 2013, Hwang did something that shocked the financial world. Instead of disappearing in shame, he started over. He renamed his operation Archegos Capital Management. Archegos, a Greek biblical word meaning leader or prince. But this time he would be smarter. This time he would be invisible. By structuring Archegos as a family office, Hwang avoided most regulatory oversight. He could trade billions without reporting his positions, without anybody knowing what he was doing. But Hwang had discovered something even more powerful than secrecy. Total return swaps. To understand how Bill Hwang nearly broke the global financial system, you need to understand this one financial instrument. Imagine you want to control $1 billion worth of Apple stock. Normally, you would need $1 billion to buy it. But with a total return swap, you only need a fraction of that money. You make a deal with a bank. The bank buys the Apple stock and holds it, and you get all the profits if the stock goes up. You pay all the losses if it goes down. But here's the crucial part. You never actually own the stock, which means you never have to tell anyone about your position. Bill Hwang had found the perfect loophole. He could control tens of billions of dollars in stocks, move entire markets, and remain completely invisible. But in March 2020, the perfect storm would give him the opportunity to test this weapon on an unprecedented scale. March 2020, as the world locked down and markets crashed, most investors panicked. But from his Manhattan apartment, Bill Hwang saw something different. He saw opportunity. While everyone else was selling, Hwang was buying. Using his network of total return swaps, he began accumulating enormous positions. ViacomCBS, Discovery, Chinese tech giants like Baidu and Tencent. But Hwang wasn't just buying stocks. He was leveraging every dollar 20 times over. For every $1 million he invested, he controlled $20 million worth of stock. And as the markets recovered from the pandemic crash, Hwang's bet paid off spectacularly. And by early 2021, Archegos Capital Management controlled $36 billion. And Bill Hwang had built the largest family office in history, and almost nobody knew it existed. But there was one thing Bill Hwang couldn't control, one variable that would bring his entire empire crashing down: corporate greed. By March 2021, Bill Hwang was one of the most powerful men in the world, and almost nobody knew his name.
The other thing he did, increasingly, was use borrowed money. On Wall Street, it's called leverage.
He had borrowed a lot of money, and that meant his gains were exacerbated, and he then plowed them all back into the same bet, that by the end of it, you had someone who had taken a fortune that started at a little over 200 million and in under 7 years had taken it to over $20 billion.
His positions in ViacomCBS had grown so large that he effectively controlled the company's stock price. When Hwang bought, the stock soared. When he sold, it crashed. He had achieved something that most hedge fund managers only dream of: the ability to move markets with a single trade. But power like this comes with a terrible price. The more leverage you use, the more dangerous every trade becomes, and Bill Hwang was walking a tightrope over an abyss. Every successful trader knows the golden rule: never risk more than you can afford to lose. But success had made Bill Hwang reckless. What started as 5-to-1 leverage became 10-to-1. 10-to-1 became 20-to-1. And in some positions, Hwang was leveraged 50-to-1. This meant that a 5% drop in his stocks would wipe out his entire investment. A 10% drop would trigger margin calls that could destroy everything. The banks that provided his swaps were getting nervous. Credit Suisse, Nomura, Morgan Stanley, and Goldman Sachs. They all knew they were exposed to massive risk. But the fees were too good to pass up. And besides, Bill Hwang had never been wrong before, until the 22nd of March 2021.
How could that many prime brokers be so dumb as to lever up one guy all on the same stocks?
ViacomCBS executives made an announcement that would change everything. The company would raise $3 billion by selling new shares, $2 billion in common stock, $1 billion in convertible preferred shares. To most investors, this seemed like good news. The company was raising money to invest in growth. But Bill Hwang understood something that others missed. $3 billion worth of new shares meant massive dilution. The stock was about to crash. And when ViacomCBS crashed, it would take Bill Hwang's empire with it.
Right now, as you can see, the stock is down nearly 7%. It dropped about 32% following the announcement on TV.
Within hours, ViacomCBS stock was in freefall, down 10%, 20%, 30%. And then Bill Hwang's phone started ringing. Credit Suisse, we need more collateral. Nomura, your positions are underwater. And Morgan Stanley, you have 2 hours to meet our margin call. A margin call is Wall Street's way of saying, pay up or we sell everything. When your leverage positions lose money, the bank demands immediate cash to cover the losses. But Bill Hwang had a problem. All of his money was already invested. He had no cash left to meet the margin calls. And that's when the dominoes started to fall. 26th of March 2021. What happened next would go down as one of the most catastrophic days in Wall Street history. Unable to get cash from Hwang, the banks did the only thing they could. They started selling everything, all at once. ViacomCBS, Discovery, Baidu, Tencent, VipShop. Billions of dollars worth of stock hit the market simultaneously. But here's what made it truly catastrophic. The banks were all trying to sell the same stocks at the same time. There weren't enough buyers. Prices collapsed faster than anyone thought possible. ViacomCBS lost half of its value in a single day. From his Manhattan apartment, Bill Hwang watched $36 billion disappear. In less than 48 hours, he had lost everything. But Bill Hwang wasn't the only casualty. Credit Suisse announced losses of over $4 billion. Nomura lost $2 billion, and Morgan Stanley nearly $1 billion. These weren't just numbers on a screen. These were institutions that had survived world wars, depressions, and financial crises. And one man trading from his apartment had brought them to their knees.
But Credit Suisse has managed to be the biggest fool of all. It's the lure of the really easy money that the idiot was paying you, being the prime broker for a jerk. But he was a convicted insider trader that came out of the craziest part of the hedge fund industry. And they were getting unusual profits by extending unusual credit. I mean, it was just, the world was shouting at them, crook, fool, and they didn't listen.
Within days, regulators around the world launched investigations. How had one family office accumulated so much power? How had the banks allowed themselves to become so exposed? And most importantly, how had Bill Hwang hidden it all for so long? The man who had spent years avoiding the spotlight was suddenly the most famous person on Wall Street. But his story was far from over, because in America, there's always a reckoning. April 2022. 14 months after the collapse, federal prosecutors made their moves, and Bill Hwang was charged with 11 criminal counts: racketeering, securities fraud, market manipulation, and wire fraud. The government's case was simple. Hwang had lied to banks to get bigger credit lines. He had manipulated stock prices through massive, coordinated trades, and he had turned Archegos into a criminal enterprise. The trial began in May 2024. For 9 weeks, prosecutors painted a picture of systematic fraud and manipulation. They showed how Hwang had hidden his true positions from banks, how he had coordinated trades across multiple prime brokers to inflate stock prices, and how he had built a house of cards that was always destined to collapse. Was that he was a legitimate investor who had simply made bad bets, and that the banks knew exactly what they were doing when they provided him with massive leverage. That this was capitalism, not crime, but the jury wasn't buying it. On the 10th of July 2024, after days of deliberation, the jury reached their verdict: guilty on 10 of 11 counts. The man who had once controlled $36 billion was now a convicted felon. And 5 months later, Judge Alvin Hellerstein delivered the sentence: 8 years in federal prison. At 60 years old, Bill Hwang would likely spend the rest of his productive life behind bars. The immigrant who had achieved the American dream had lost everything, twice. But Bill Hwang's story isn't just about one man's rise and fall, it's about the systematic risks that still exist in our financial system. In the wake of Archegos, regulators had proposed new rules, better disclosure requirements for total return swaps, stricter oversight on family offices, higher capital requirements from banks. But critics argue these changes don't go far enough. That the next Bill Hwang is already out there, building the next financial weapon of mass destruction. The markets continue to evolve, new instruments are created, new risks emerge, and somewhere out there the next Bill Hwang is probably placing his first trade. The question isn't whether there will be another Archegos. The question is whether we'll be ready for it.